Let's look at Article 12, Paragraph 7 of the India-USA Treaty. And this basically deals with where do royalty or FTS arise. Royalty and fee for included services shall be deemed to arise. So what this means is that even if under the local or internationally acceptable rules, this income would have arisen in some place, by virtue of this clause, it shall be deemed to arise in a contracting state where the payer is that state itself, a political subdivision, a local authority, or a resident of that state. So suppose there's a US company which is deriving royalty from India. If the payer who's making the payment of royalty is either the Indian state, a political subdivision of the Indian state, a local authority, or a resident of India, in all these cases, royalty shall be deemed to arise in India. Right? Now, if you actually compare this with the provision of the Income Tax Act, those provisions are slightly better. And the reason for that is, in those cases, for a resident, let's say for example, if the payments are in relation to a business outside India, those royalties are not deemed to arise in India, right? But having said it, the provisions of this first paragraph goes on to say that depending on the nature of the payer, nature or maybe composition of the payer, royalty will be deemed to arise in India, right? Where, however, now if you note here before going into, a non-resident is not covered in this particular part. Where, however, the person paying the royalty or FIS, whether he's a resident of a contracting state or not, has in a contracting state a PE or a fixed base. Now let's say for example, there is another company, let's call them X. X has a PE in India, right? And X is the payer in this case. So where however X, the person is X, paying the royalty or FIS whether he's a resident of a contracting state or not, which means even X can be a non-resident, has in a contracting state, which means in India, if X has a PE in India, in connection with which the liability to pay the royalty or FIS was incurred. Just because he has a PE in India does not mean that every payment of royalty that he makes outside India shall be deemed to arise in India. It is only when the payment of royalty or FIS is in connection with, okay, the royalty or FIS which was incurred with the connection with the PE. And not only should it be incurred in connection with the PE, such royalty or FIS are borne by such PE. Now the word borne would typically mean that the economic burden or the deduction for such an expense is claimed by the PE for computing taxes under the Indian laws, right? Then such royalty or FIS shall be deemed to arise in the contracting state in which the PE or the fixed base is situated. So two categories. For residents, including the state or political subdivision, they shall always be deemed to arise in India. For a non-resident or a person who has a PE in India, if he incurs the liability for royalty in connection with such a PE, and the PE also bears the cost of such royalty or FIS, then it shall also be deemed to arise in India. Let's look at paragraph B, where under subparagraph A, royalty or FIS do not arise in one of the contracting states. So let's say they do not arise in India. Why? Because either the payer is not one of the categories which are covered, or if it is relating to the PE, it is not taxable because it doesn't satisfy the condition. Just like the example of broadcast of live matches that we just saw, right? If the royalty or FIS do not arise in India, and the royalties which are paid by the non-resident relate to the use of or the right to use, the right or property, or the fee for included services related to services performed in one of the contracting states. So let's say the services were performed in Singapore or US, right? The right which was used for royalty, etc., was used in US.